let's talk more about some primary market action. FirstCry's parent Brain Solutions will be launching its IPO on the 6th of August. FirstCry, a brand synonymous with new mothers and baby products in India, has a gross revenue of 25,000 crore rupees and more than 9 million unique transacting customers. Our colleague Reema Tendulkar caught up with Supam Maheshwari, CEO of FirstCry, to discuss their growth outlook, their plans, and she started off by asking him about when the company will turn profitable. Take a look.
This is a very large industry in the first place. We are addressing $34 billion. India creates 26 million babies a year. And we will be $68 billion of the size of the market by CY28. And with such a large market which is growing at a 20% CAGR, it is bound that we will have a journey of our own. If you look at our India multi-channel, it's actually already profitable. We have been profitable for last 4 years in the adjusted EBITDA basis. Our last year adjusted EBITDA was around close to 8.8% for FY24 for an India multi-channel business.
Let's talk about your gross margins. Your gross margins have ranged between 30 to 35%, which is lower than the direct retailers. Any of the listed retailers, they all have minimum gross margins of 40%. Why is yours lower? And you spoke about improving gross margins.
So we have been, obviously, all these years we have been improving gross margin. If you look at our gross margins for last 2 to 3 years, they've been improving year-on-year basis without having any year that we have not improved our gross margin. And this will be a factor that we will be able to improve our assortment mix, our curation, our investment in brands, our investment in our home brand strategies, which essentially will mean that we will be able to continue to compound our gross margins over a longer period of time. Our journey has just begun, although we may look like 13 years.
So 40% plus gross margins is possible, right?
Look, others have done it. We should be able to do it, but we will get there in our journey as we go along. I can't say for the future, but we will definitely strive to get there. It's not something impossible.
Okay. Let's break up your business into India, which is about 70% of your revenues. You have international presence in UAE and Kingdom of Saudi Arabia. And then you have a house of brands, D2C investments in 21 entities, which you house under Global Base. Now, India revenues in particular. Now, FY24 appear to be a bit of a slower growth for you. Reported revenues have gone up by just 7%. Your EBITDA margins are between 8.5% to 9%. Again, lower than the listed peers. What can you guide on the India business?
So look, we are not at a steady state. We are a new age, ecosystem modeled retail organization today. We believe that we will be able to, continue to grow in India as well as international and as well as in global Bs, because some of the other adjacencies that we have done are very recent, very young. From a profitability standpoint, obviously we have grown meaningfully in India from, as I said, from 5.9 to 6.2 in FY23 and 8.8 in FY25.
Yes. That's
if you
the
look
margin.
at our that's adjusted EBITDA margin.
EBITDA margins, yeah.
Because that's how you should look at the company, because that's the operating adjusted EBITDA margins, and this will continue, and we are not at a steady state. I can only say,
so what are steady state margins for the India business?
Other listed players are at a very tall EBITDA margins, okay. And we aim to get there. We are in our growth. We will be investing out of the use of proceeds that we will raise from the public markets. We will invest behind our brand, our technology, our supply chain, getting more customers, and with that we believe that we will be able to continue to expand our gross margins, our operating leverage, and through our marketing cost and so on and so forth, and essentially driving up the operating. Absolutely.
So what are tall EBITDA margins that you're comparing?
Look, they are in high teens. I mean, the good companies, we always sort of benchmark ourselves to leaders who have done there and have become, So
aspirationally, which is that company?
Well, there are good companies. There are all good companies where...
Name two.
I like in person, companies like Page Industries.
Okay.
Yeah, I mean, that's one company I believe they've done very well in terms of EBITDA margins. Even for that matter, Trend.
UAE and Saudi Arabia, because that is bleeding for you. That's the biggest drag for you at the bottom line. EBITDA losses in the international business was 140 crore in FY24, 120 crore in FY20. How long will it be loss-making? Is there a turnaround plan? What is your turnaround plan?
We started in UAE in October 19 and in Saudi Arabia, in Kingdom of Saudi Arabia in August 22. And we have not even finished 2 years.
Yeah.
This month we will
So
finish.
how long does it take to turn around?
So it will be a couple of years as the journey has been in India.
So India took how long for you to turn around?
Well,
if you
India
want to
took-
copy the same playbook.
Well, India would take a little longer because we started from scratch,
Okay.
right? And in international markets, it won't take that kind of long time because we took all our strengths at a platter, right? And then actually we have done all, the hard work of building our supply chain, our tech
So 5
platform,
years,
brand.
10 years from now?
No. I don't think that's too long.
It's
If
too
you-
long.
It's
Not
too
even
long.
5 years. It should turn around before that.
Well, much earlier than that.
Next year?
No, I won't say that.